Good morning. Happy Thursday. In this series of live Facebook that I've been doing, my favorite day has been Thursdays, which I've named as the new normal. And the new normal is really just, how are we going to evolve to be able to thrive in the future? And we're headed to the future. It's definitely changing. Everything's changing. And so I thought I'd just take Thursdays and I'd give you my perspective on where we need to be, where the puck's going to go, and how we need to position ourselves to win in the future. So if you'd like that idea, I think this is my 8th or 9th week. Well, it might be my 10th. Heck no, I don't know. Now that I think about it, it's probably my 12th week of the new normal series. Some of them are pretty interesting. Some of them are some of my most watched live Facebook Live, so check it out. Now, before we get started, a couple things. First, painting of the day. As this month, we've done a different painting every day. As I said, I'm threatening to take you out into the homeland here where you can see some of the bigger art. But that is called Pike's Monument. And what that's a painting of is Pike's Peak, which is just a couple miles from my house. And it's the most prevalent mountain near me. And if you're familiar with the Scottsdale Phoenix Basin, it's surrounded by mountains. To the north, to the east of us here in Scottsdale, it's the McDowell Mountains, and it's a really pretty mountain range, and it has thousands of miles of hiking and all sorts of wildlife. But that happens to be one of the mountains, and so that's a picture of. So that's the picture of the day. Now let's get on to some new normal stuff. Earlier this week, I did a podcast with Eric and Neil Billock of All Rise AI. And what they have is a fairly early company in the voice AI or AI voice assistant or AI voice sales assistant. And it was a really interesting conversation, a tad dry, but a very interesting conversation. It was super informative. But what I'm impressed with is several people that have watched that podcast have connected with them and have already contracted with them to have them help convert leads using voice AI. And one company is using them now to screen inbound phone calls. I don't remember what the funnel was that's getting inbound phone calls, but the AI agent is going to ask qualifying questions, provide information, and then do a warm transfer to the sales rep for those leads that are good. I don't fully know what the other person that signed up is doing, because I don't have anything to do with that company. I was happy to hear, because some of the people connected with me and connect with them. I was just happy to hear that people are willing to dip their toe into new stuff and try it. Certainly that company, All Rise AI, is not the most sophisticated company, but it's affordable and available to us, and so it's not a bad option. And that was an example of where the puck's going on technology. Matter of fact, this morning I woke up and I read Housing Wire's article this morning, are AI real estate agents the future for home buyers? And it says these firms think so. Highlighted in the article, Realpha, Modern Realty, and Homa, each does a slightly different thing, but each is bringing some sort of automated process to the real estate buyers universe to different degrees. One of them thinks that they can actually be a totally virtual real estate agent and provide better services. I don't know if that's the case, but it just tells you how the world's changing. Now, just to be clear, I don't think technology is going to replace people, especially what we do in real estate and mortgage. It is a highly human, process and experience. That being said, it needs to be completely tech-enabled and tech-forward, but it needs to be wrapped with the human. And as you've heard me talk about in one of my new normals before, the last mile of this process of delivering real estate, of delivering mortgages, is going to be the most human of the segments in the process, and that's where we need to shine, is that last mile of delivery of the products and services. But today, I'm in a somewhat lighthearted mood. Sometimes we have these new normals and I get kind of intense and I get fired up, I get passionate about where I think we're going. I thought I would just talk kind of at a high level on a topic we've touched on before, which is speaking to mortgage platforms or lenders or mortgage companies. Why do they exist, and what do they need to do to thrive in the future? Because the truth is, we have a lot of companies in our space, mortgage and real estate, that have no real reason to exist. They don't offer any unique value to the marketplace or to their employees. If they were to disappear overnight, nobody would really care other than the principals of the company. And so as I talk to different owners and C-suite people, what I really encourage them is fortify your reason to exist. Why do we exist? Is the reason we exist compelling? Who is it compelling to? Does it serve some spot in the market? Are we the only ones that can deliver this service in the way that we are? Like if you get good answers to that, then your likelihood of thriving in the future goes way up. And it's really simple. Why do we exist? What do we do uniquely better than everyone else? What unique product, service, or experience we deliver that nobody else can in the marketplace? And you start to have a really compelling reason to exist. So let's just look at a mortgage company in general. A mortgage company has to do four things. There's four tires on this car called the mortgage company. The first thing, of course, is lead generation and conversion, which we typically call sales, right? We generate leads and we convert them. That's super important. Without that, we can't exist. The next is we got to fulfill loans, right? So once we get a lead and we convert it, we have to fulfill it. We have to get it to closing, from origination to close. That's fulfillment. Third, we have just the general administration of the business. That is what supports the organization, lets it breathe. Those things are like, HR and compliance, marketing, all those type of things. And then the fourth is pricing. And pricing, I don't mean capital markets. Pricing is really just a byproduct of expense management. Pricing is a byproduct of making good investments. And so a company has to be pretty good at these four things. When one of their tires goes flat, the company goes slow and the market overtakes them, right? If you have poor sales, you're not generating enough business, well, you're not going to thrive, right? If you have poor fulfillment, you're going to have all sorts of retention problems with both your sales force and your customers. And once again, you got a flat tire, your car's not going to go far. If you have poor administration and that people aren't getting paid, or you're not compliant, or all those things, well, your company is going to really be at a disadvantage. And then finally, I think probably the most critical, if you can't manage expenses and you can't make good investments, then your pricing is going to be way out of whack, and your value therefore will be out of whack. And so you got to master all four tires, and that's what you have to do to have a company. And you can't really have one flat tire. Now you can have one that's a little low on air, but you can't have a flat tire. So if you're a company, go, how am I doing in those four things? How am I doing? And some companies, they do three well, but that's not going to let them, make it in the future. You can't do fulfillment, administration, and pricing well and not have sales. Like that's not going to work. And then again, you can't have sales but not have fulfillment. I mean, it doesn't work. If you can't close your loans, you're not going to have a company. And you can't do any of it if you do it all at a loss, which is pricing. That's the expense management and investment stuff. So you got to master all four of those and be pretty good at them as just a base level. So that being said, the part I want to kind of talk about today, and I'm doing this as a precursor because I'm doing another podcast, my 6th podcast tomorrow, and I'm really excited about the podcast tomorrow because I'm going to have somebody on that's going to talk about how they're going to try to disrupt the space, how they're going to come up with a new model and a new thought, right? And by the way, Jeremy Patterson, thanks for joining me. Chris Welton, dude, I love you, man. Thanks for joining me. So I want to talk about, going back to what a lending company, what's the value prop or relationship they need to have with their sales force. Because the sales force is the most important thing. And, lending, for the most part, lenders have a really difficult task at hand because largely we cooperate and collaborate with self-source loan officers. And self-source loan officers are very independent people. And at times, the nature of the way we do business is understandable that the self-source salespeople can become somewhat mercenaries in that they're primarily looking after themselves and their clients, right? And so oftentimes there's an adversarial relationship between a company and the loan officer. And the way that you can lower that, adversarial relationship is by bolstering your value. The more valuable a company is to its sales force, the better relationship they have. And so I'm going to speak to a few types of value that a lender might build into their platform to create the most partnership and the strongest relationships with their employees. And so the first thing is, a company is really hitting on all cylinders if they're providing a significant amount of business to the loan officers, right? And so they're providing the loan officers a significant amount of production. And what this does, it makes loan officers sticky to the organization, right? And that might come in all sorts of ways. That might come by companies doing business development. They might have some proprietary funnels. They might be doing some extensive marketing that generates leads. They might have some company-controlled referral streams, say like a builder source or B2B. And it also might come through a massive company-owned database such as servicing. So all those are examples of ways that company can generate business for its Salesforce. And when it does, if you start saying, "Gosh, there's a tipping point." I think that if a company can generate 25 to 30% of the business for its loan officers, for its self-source loan officers, those loan officers start to become very sticky and then become better partners, right? Now the tricky thing is, what I've learned over time is that if I go out and I source a relationship for a loan officer and I give that loan officer the relationship, over time they forgot that I gave it to them and they forgot that it was company generated, and over time they take ownership of that relationship, and then that relationship becomes just as portable as they are in case they wanted to leave, right? And a self-source loan officer is free to go wherever they like, which makes it very hard to win their business every day. So when you provide company provided production, I think the key is for the company is try to control the relationship or the source for as long as you can. Freely share the fruits of the relationship, freely share the responsibility of the relationship, freely share nurturing the relationship, but continue to own the relationship so that the relationship stays with the company and therefore the loan officer stays with the company. So the first thing is that company provided production. The second thing is, I think that we get value to our loan officers is that we figure out how to pay them more on their current production, right? And that's where you get all these different branch models. You get net branches, even broker models. They're all about how does the loan officer keep more of the money, right? And you can do that. I talk about different income models, different revenue sharing. You might be able to pay higher commissions because you have a lower expense stack, or you might, pay your loan officers expenses so they don't have to pay the expenses, right? And the thing about the last one though is loan officers least value when we pay their expenses. It's because to them they think that it's just, it's a given, but they forget that it's actually in their income column. So I prefer to give them the income and then let them spend that money on whatever they like. But so the second thing we can do is, give the loan officers more of their money. And if you ask me, platforms like Cross Country really did this. They said, "Hey, come work for us, and we're just going to share more of the revenue with you." They're not the only ones. I'm just using them as an example. And that seems to be slipping a little bit. That just more revenue share in these 5 things that you can do. The third thing, of course, is create new income streams. And that's what we're going to talk about on my podcast tomorrow a little bit. But create new income streams. And new income streams for the producer could be ownership, right? You give them ownership in the company. It could be sharing monetized verticals, right? Let's say that you share in the SRP with the loan officer and you get them an annuity on that, or you create, say you have a title company and the loan officer gets to share the revenue from the title company, whatever it is, you create all the verticals and you monetize them, but you allow the loan officers to participate in that, and that can make them sticky. And like I said, we're going to talk about tomorrow in a really interesting way. You might also give them some creative ways to benefit on overrides or other types of revenue from people they recruit to the organization. And so the third way you can add value is to build more income streams for not only your sales force, for all your employees. The fourth thing, of course, is if you truly can create a transformative or disruptive proprietary platform or process. And the easiest way to explain this is Rocket Mortgage, push button, get mortgage, right? That changed not everything, but a lot of things. Push button, get mortgage. And so if you have that, your employees are drawn to work for you. Other things that will fall in that transformative and disruptive would be like unique products, right? I remember Steve Marshall, when he got into the business, early in the business, how he had a breakthrough is when he went to Old Kent and they created a product on how to cross-collateralize RSUs for Boeing and Microsoft employees so they could get 100% financing, but on a super low rate. He created a product that is market needed. Now I might have messed that up a little bit, but he created a product that the market needed, and that was unique. It was transformative, and it drove his business. So the fourth thing is, do you have something that's completely unique and transformative and disruptive, and if you're offering it? And if so, then you're going to attract employees. The fifth thing, which is a really interesting thing, is it used to be, I think, a much bigger value prop, and it's not as much today, and that is you just have an overwhelming market advantage. do you have this giant brand recognition or market share that just becomes gravity, a gravitational pull that brings business to your company? And a lot of, and what we used to see that was like think Countrywide and then think Wells Fargo or Bank of America. People work for those brands because they're massive brands with a huge name recognition that people trusted, and loan officers like to work for a trusted brand. So those are kind of 5 of the value props, the buckets that I think lenders and mortgage companies need to figure out. Which one are you? How do you rate in each of those? You don't have to kill every one of them, but you better be really, really good in at least 1 and okay in 3. Like you can be good and really, really good, like a leader in 1, okay in 3, and then you can be not so good in 1. That's okay. You can't be everything, but you got to figure out what it is. Because remember, what you have to solve is what is your compelling reason to exist as a company. And you should ask this to your employees all the time. Why do we exist? Why does it matter? If we close tomorrow, would anybody care? Would it make a difference? Do we have a compelling and unique product or service that we deliver to the market that only we can do? Those are the things you have to ask yourself. And if you can answer those honestly, and you can answer those affirmatively, then you're going to thrive in the future. You're going to thrive in the new normal. So that's it. That's all the time I have today. I'm over time. I appreciate anybody that stopped in. I appreciate people that come and visit any of my live sessions. I'm doing both a live tomorrow and a podcast. The podcast will be really interesting. You'll like to see it. It will be some one of the industry's leaders' view on where they think the puck's going for the industry, and it has a different thought than me. So that's great. I can't wait to do it. I'll see you tomorrow. Hope you have a great week. Talk to you soon. Thanks. Bye.